A caveman named Grok had 12 rocks. He needed 15 rocks to buy dried meat for winter, so the shaman gave him a special stone, a promise stone, that let him take the meat now and pay the rocks later. Grok took the meat. He had 30 sunrises to return the rocks. He did. Life was good. Next winter, Grok needed more meat. He used the promise stone again. But this time, Grok only had 10 rocks when the 30 sunrises passed. The shaman said, "Fine, keep the meat, but now you owe 17 rocks, not 15. Grok thought he'd pay next moon. But next moon, he owed 19 rocks, then 22, then 26. Grok kept hunting, but the shaman kept adding more rocks to the debt. And one morning, Grok realized he was hunting just to pay for meat he already ate 3 winters ago. The promise stone wasn't magic. It was a trap disguised as convenience. Here's what actually happened. The promise stone is what we call a credit rock in the cave world. And credit rocks are the single most misunderstood tool in the entire tribal economy. Most cavemen think they're borrowing from the tribe. They're not. They're borrowing from their future selves. And their future selves are getting a worse deal than they realize. So let me explain how credit rocks actually work using the cave as our model, because once you see the system, you can't unsee it. In the beginning, the tribe used rocks for everything. You hunt a mammoth, you get 10 rocks. You gather berries, you get 2 rocks. You trade rocks for fire, for shelter, for tools. Simple. But then a caveman named Thok wanted a new spear. The spear cost 8 rocks. Thok only had 5 rocks. So Thok went to the shaman. The shaman had many rocks, more than any caveman in the tribe. The shaman said, "I'll give you a credit rock." This credit rock represents 8 rocks you don't have yet. You take the spear now, you give me 8 rocks later. If you give me the rocks within 1 moon cycle, we're even. If you don't, you give me 9 rocks instead of 8. That extra rock is called interest. It's the cost of borrowing from tomorrow. Thok thought this was a good deal. And it was, if Thok paid within 1 moon. But here's where the system reveals itself. The shaman didn't just give credit rocks to anyone. First, the shaman checked Thok's history. Did Thok return borrowed rocks before? Did Thok hunt regularly? Did other cavemen trust Thok? All of this went into one number, the trust score. In the modern world, we call this a credit score. In the cave, it's just how many times you kept your word. A caveman with a high trust score could borrow more rocks. A caveman with a low trust score couldn't borrow anything. And if your trust score was really bad, you couldn't even join the mammoth hunts because nobody believed you'd carry your weight. The shaman used a range. If your trust score was above 740 out of 850, you were trusted. Above 800, you were very trusted. Below 580, the shaman wouldn't even look at you. And this score followed you everywhere. It determined what shelter you could live in, what hunts you could join, even which gatherers would trade with you. Now, most cavemen think the credit rock is unlimited. It's not. The shaman set a limit. For a young caveman like Thok, maybe you could borrow up to 1,000 rocks worth of goods. But you couldn't just take 1,000 rocks and run. Every rock you borrowed reduced how many you could borrow next time. If you borrowed 200 rocks for a spear, you could only borrow 800 rocks more until you paid the first 200 back. The shaman called this your available credit, and the shaman watched it closely. But here's the first escalation that most cavemen miss. Let's say Thok used the credit rock to buy the spear for 8 rocks. Thok now owed the shaman 8 rocks. Thok had 30 sunrises to pay. If Thok paid all 8 rocks within 30 sunrises, everything was fine. No extra cost, no interest. The promise was kept. But if Thok only paid 2 rocks, or 4 rocks, or even 7 rocks, the shaman started adding interest. And the interest wasn't added once. It was added every single sunrise. Thok didn't pay the full amount. This is called compound interest in the modern world. In the cave, it's called the debt that grows while you sleep. So let's say Thok owed 8 rocks. The shaman's interest rate was 2 rocks per 100 rocks owed per moon cycle. That's 2% per month in modern terms. After the first moon, if Thok paid nothing, the debt became 8 rocks plus 16 extra rocks, which is 8.16 rocks. Doesn't sound like much, but after the second moon, the interest was calculated on 8.16 rocks, not the original 8. So now Thok owed 8.32 rocks. After 3 moons, 8.49. After 12 moons, 8.97. After 24 moons, 10.13 rocks. Thok borrowed 8. Thok now owed 10. And Thok hadn't bought anything else. The debt grew itself. This is how the credit rock worked. It wasn't evil, it was just math. But the math was designed to favor the shaman, not the caveman. And here's the second escalation. The shaman offered rewards to encourage cavemen to use the credit rock more. If you used the credit rock to buy meat, the shaman gave you 1 rock back for every 100 rocks you spent. If you used it to trade for furs, the shaman gave you 2 rocks back. If you used it for travel to another tribe, the shaman gave you special travel points that could be traded for shelter or food. The shaman even offered a big bonus. If you used the credit rock to spend 500 rocks in the first 3 moons, the shaman gave you 50 rocks as a gift. Cavemen loved this. They thought they were getting free rocks, but they weren't. The shaman was training them to use the credit rock more, which meant borrowing more, which meant owing more. And every rock they owed generated interest if they didn't pay in full. The rewards were bait. The interest was the hook. So why did cavemen use credit rocks at all if the system was designed against them? 3 reasons. First, some cavemen couldn't afford to pay for things now, but could pay in smaller amounts over time. A shelter cost 200 rocks. A caveman only made 15 rocks per moon. With a credit rock, the caveman could move into the shelter now and pay 20 rocks per moon for 10 moons. Yes, they'd pay 220 rocks total instead of 200 because of interest, but they got the shelter now instead of waiting 14 moons to save up. Second, credit rocks built trust score. If a caveman wanted to buy a big shelter or a cart someday, they needed a high trust score. Using a credit rock and paying it back on time was the fastest way to build that score. The shaman tracked everything. Every time you paid on time, your score went up. Every time you paid late, it went down. And a low score made everything harder. Third, credit rocks were safer than carrying real rocks. If a thief stole your real rocks, those rocks were gone. But if a thief stole your credit rock, you just told the shaman, and the shaman would refuse to honor any trades made with that stone. The thief couldn't use it. You didn't lose your borrowed rocks. And if you accidentally traded for rotten meat, the shaman would step in to help because it was the shaman's borrowed rocks at risk, not yours. But the biggest reason most cavemen signed up for credit rocks was the rewards. The shaman made it feel like the caveman was winning. Now here's the third escalation, and this is where it gets really interesting. The shaman didn't just offer one type of credit rock. There were different credit rocks for different cavemen. Some credit rocks gave you extra rewards on everyday things like meat and fire. Some gave you rewards for travel to other tribes. Some credit rocks were only available to the wealthiest cavemen, the ones who already had more rocks than they needed. These premium credit rocks offered free travel, free shelter, free entry to the chief's feast. Because nothing says you need help like already being rich. But all credit rocks had one thing in common. They all charged interest if you didn't pay back the borrowed rocks in full within the moon cycle. And the interest rates were high. Most credit rocks charge between 15 and 25 rocks per 100 rocks owed per year. That's 15 to 25% annual interest in modern terms. Compare that to a shelter loan, which might charge 3 to 5 rocks per 100 per year, or a cart loan, which might charge 4 to 7 rocks per 100 per year. Credit rock interest was 3 to 5 times higher than other types of borrowing. Why? Because credit rocks were unsecured. The shaman couldn't take anything from you if you didn't pay. If you borrowed rocks to buy a shelter and didn't pay, the shaman took the shelter. If you borrowed rocks with a credit rock and didn't pay, the shaman couldn't take the dried meat you already ate. So the shaman charged more interest to compensate for the risk. And here's the fourth escalation, the one that traps most cavemen. The shaman didn't require you to pay back all the borrowed rocks at once. You could pay just a small amount, called the minimum payment. If you owed 100 rocks, the shaman might only require you to pay 2 rocks this moon. Cavemen thought this was generous. It wasn't. It was designed to keep you in debt longer. Here's why. Let's say you owed 100 rocks. The interest rate was 20 rocks per 100 rocks per year, which is about 1.67 rocks per 100 per moon. If you paid 2 rocks, 1.67 rocks went toward interest, and only 33 hundredths of a rock went toward the actual debt. Your debt only went down by 33 hundredths of a rock. At that rate, it would take you years to pay off 100 rocks, and you'd pay way more than 100 rocks total. The minimum payment was designed to keep you paying interest forever while barely touching the actual debt. It was a trap disguised as flexibility. And the shaman added fees on top of everything else. A setup fee just to get the credit rock, a late fee if you didn't pay the minimum on time, an annual fee just to keep the credit rock active, even if you didn't use it, a fee to take rocks out of the rock holder using your credit rock, a fee if you used your credit rock too much in one moon, a fee if you used the credit rock to trade with another tribe that used different rocks. Every fee was small, but they added up, and they all generated interest if you didn't pay them within the moon cycle. Now let me give you a real scenario with real numbers to make this concrete. A caveman named Drock had a credit rock with a limit of 1,500 rocks. Drock used it to buy dried meat for 300 rocks, a new spear for 150 rocks, and furs for 200 rocks. Drock now owed 650 rocks. Drock's interest rate was 22 rocks per 100 rocks per year, which is about 1.83 rocks per 100 per moon. That's about 11.9 rocks of interest in the first moon on 650 rocks owed. Drock paid the minimum, which was 25 rocks. 11.9 rocks went to interest. 13.1 rocks went toward the actual debt. Drock's debt went down to 636.9 rocks. Next moon, interest was 11.65 rocks. Drock paid 25 rocks again. Now the debt was 623.55 rocks. Drock kept paying 25 rocks per moon. After 1 year, Drock had paid 300 rocks total, but Drock still owed 510 rocks. Why? Because 140 rocks of what Drock paid went to interest, not the debt, and this continued. After 2 years, Drock had paid 600 rocks total, but still owed 390 rocks. After 3 years, Drock had paid 900 rocks and still owed 290 rocks. To fully pay off 650 rocks at 25 rocks per moon, it would take Drock 38 moons and cost him 950 rocks total. Drock paid 300 rocks in interest alone for meat and furs he bought 3 years ago. This is how cavemen got trapped. They thought they were managing the debt by paying every moon, but they were just feeding the interest machine while the debt barely moved. Now you might be thinking, why didn't Drock just pay more per moon? And that's the right question. If Drock paid 50 rocks per moon instead of 25, he'd pay off the debt in 15 moons and only pay 75 rocks in interest instead of 300. If Drock paid 100 rocks per moon, he'd be done in 7 moons and pay 25 rocks in interest. The faster you paid, the less interest you paid. But most cavemen couldn't pay more because they were already using the credit rock to buy things they couldn't afford with their current rocks. They were stuck. And here's the comedic cutaway. Imagine Drock explaining this to another caveman. Yes, I bought meat 3 winters ago. No, I still haven't paid for it. Yes, I'm still paying. No, I don't know when it ends. Yes, I understand this sounds insane. Or picture the shaman's pitch. This credit rock gives you freedom. The freedom to owe me rocks forever. The freedom to pay interest on things you don't own anymore. The freedom to die in debt. Sign here. But to be fair, credit rocks weren't inherently bad. They were tools. And tools can be used well or used poorly. A caveman who used a credit rock to buy dried meat, then paid the full amount back within 30 sunrises, paid 0 interest and got free reward rocks from the shaman. That caveman came out ahead. A caveman who used a credit rock for emergency shelter during a storm and paid it back over 3 moons at low interest was using the tool to survive. That was smart. The problem was that the system was designed to make the second scenario rare and the first scenario difficult. The shaman made it easy to borrow. The shaman made it easy to pay the minimum. The shaman made it hard to see the total cost. The shaman added rewards to encourage more borrowing. The shaman built a system where the default outcome was debt and the intentional outcome was profit for the shaman. So here are 3 things a smart caveman does with credit rock. First, a smart caveman treats the credit rock like a dangerous animal. Useful if handled correctly, deadly if not. You don't borrow more rocks than you can pay back within 1 moon cycle. You don't use the credit rock to buy things you can't afford with real rocks. You don't carry a balance. You pay the full amount every time. If you can't do that, you don't use the credit rock at all. Second, a smart caveman reads the shaman's terms before taking the credit rock. You check the interest rate, called the annual percentage rate. You check the fees, you check the rewards. You pick a credit rock that matches what you actually buy. If you mostly buy meat, you pick a credit rock that gives extra rewards on meat. If you mostly travel, you pick a credit rock that gives travel points. You don't pick a credit rock just because the shaman offered it. You pick one that works for you. Third, a smart caveman tracks every rock borrowed. You know exactly what you owe. You set reminders before the 30 sunrises end. You pay the full amount every time. And you never, ever borrow more than 30 rocks per 100 rocks of your total credit limit. If your limit is 1,000 rocks, you never owe more than 300 rocks at once. This keeps your trust score high and proves to the shaman that you can handle the responsibility. But most cavemen don't do these things. Most cavemen see the credit rock as free rocks. They see the minimum payment as a gift. They see the rewards as a bonus. And they end up paying 3 times what they borrowed over 5 years, while the shaman profits from their optimism. The credit rock isn't evil, it's just math. But the math is designed to benefit the shaman unless you pay attention. Remember Grok from the beginning? Grok used the promise stone to buy meat he couldn't afford. Grok paid the minimum. Grok watched his debt grow from 15 rocks to 26 rocks while he kept hunting just to stay even. Grok thought he was managing it. He wasn't. He was feeding a system that compounded against him every sunrise he waited. And one winter, Grok realized he'd spent 200 rocks paying for meat that originally cost 15. The interest had cost him more than the meat itself. Nature always collects, and in the cave, the shaman is nature's accountant.